The 99-year-old billionaire Berkshire Hathaway called cryptocurrency crazy stupid gambling at the Daily Journal shareholder meeting in February. He further added that crypto investors who disagree with him are idiots. With the trend of various events plaguing the crypto ecosystem, the sentiments have not been favorable. Things are spinning out of control, and it will be appalling to see cryptocurrencies finally living out the words of Hathaway. During periods of stress, we have witnessed market failures of stablecoins, crypto-focused hedge funds, and crypto exchanges, which in turn raise severe concerns about market integrity and the safety of users. With growing links into the core financial system, there could be a systemic risk in financial stability shortly. The present is not safe, and so is the future. So where do we run to? Of course, many of these concerns can be addressed by reinforcing financial regulation and supervision, and by developing global standards that can be consistently implemented by national regulatory authorities. It has been a heck of a crypto winter. The severe turmoil and disruption in many parts of the crypto market, the falls amid hopes of a recovery, and the repeated cycle of boom and bust have instigated a mix of reactions in the crypto world. It is a perilous time for crypto, and everything is out of control. Even regulations have skyrocketed the pain. The fall of the so-called unicorn startup FTX exchange remains one of the latest bits of bad news for investors in Bitcoin, Ethereum, and all digital assets alike. 2022 was already an awful year before the FTX saga spurred. Bitcoin prices were hovering around 16,500, down from a level of 20,000. At 20,000 is still a far cry from the price of just north of $46,000 that Bitcoin traded at the last day of December of 2021. Investors who were hoping that rising interest rates and higher levels of inflation would be good for so-called alternative assets like crypto and gold had their heads handed over to them, and there was a rude awakening earlier this year. They have gotten hit just like stocks and bonds, and there is no haven to hide in a market that has been polluted with worries about rate hikes and recession. Even gold isn't glittering anymore. The price of the yellow metal is not far from the lows it hit at the beginning of the COVID-19 pandemic in early 2020. While some experts are hoping that the worst could be over very soon, another cycle of pain has started for the crypto market. The current situation isn't looking pretty, and if there is anyone shooting shades at cryptocurrencies right now, their actions are quite valid. This is not the first time that there will be a crypto winter. Bitcoin prices have notoriously been volatile over the past few years, and they have managed to perform better than any major stock market indexes. Meanwhile, according to some analysts, it is a mistake to punish the entire crypto industry because of the FTX crash. Last year, the collapse of FTX sparked questions of contagion. The head of digital asset research at BTIG, Mark Palmer, stated in a report, "While we acknowledge that the FTX saga could weigh on the crypto space in the near term, we also believe that the sell-off in the Silvergate shares reflected a significant misunderstanding of the mechanics of the company's platform." A venture capitalist who focused on Bitcoin and crypto assets also agreed that FTX's problems won't affect the entire digital asset universe. Another analyst explained, "Investors don't appear to be concerned about the impact of FTX on Bitcoin's future." However, the collapse of FTX has proven to be the starter of a thread of issues in the crypto sector. So now what? This isn't even the time for a display of optimism. More than 3 months after the FTX bankruptcy filing, most customers still can't access their frozen assets. The US Commodities Futures Trading Commission estimated that there are more than $8 billion of missing FTX customer funds. FTX founder and CEO Sam Bankman-Fried got more bad news in late February when federal prosecutors charged him with 4 additional financial crimes on top of his 8 fraud charges. The new charges include conspiracy to operate an unlicensed money transfer business and conspiracy to commit bank fraud. It's absolutely a mess, a really bad one. Bitcoin and other top cryptocurrencies delivered more gains in February after a remarkable move in January. Perhaps it was the New Year vibe that played out. And as usual, crypto investors were optimistic that 2022's crypto winter was a matter of the past. Despite the unflinching faith on the part of investors in the first 2 months of 2023, rising interest rates should remain a headwind for crypto prices in the coming months. Let's not even get started about the regulatory and legal backlash that has begun to impact the market. The top cryptocurrencies held up well in February, marked as it was renewed by inflation worries, a tight labor market, and the possibility of more Federal Reserve interest rate hikes. Bitcoin's prices briefly topped 25,000 before concluding the month at 23,327, a 1.3% monthly gain. Ethereum's prices rose 3.7% to close the month at $1,630. Among the top 10 cryptocurrencies by market capitalization, Polygon was the best in February with a 6.6% gain, while Dogecoin took the back seat with a 7.4% loss. Cardano, on the other hand, missed out on those short bullish runs. However, a wave of industry bankruptcies have set the prices of the most popular cryptocurrencies tumbling. The SEC has been upbeat about regulations. It recently proposed a new rule that would amend federal custody regulations requiring crypto exchanges and other custodians to secure or maintain federal or state regulations to hold customer assets. These new rules might make it difficult for Coinbase and other crypto exchanges to legally keep institutional customers' crypto assets. On February 16th, the SEC charged Terraform CEO Do Kwon with orchestrating a multi-billion-dollar crypto asset securities fraud. Recall that Kwon was the founder of the failed cryptocurrencies TerraUSD and Luna, which wiped out $60 billion in investor value when they collapsed last year. Crypto trading platform Kraken also agreed to pay a $30 million fine to the SEC and terminate its crypto staking service for US customers. According to the SEC's allegations, Kraken's staking as a service product was unregistered and did not include proper disclosures for investors. In addition, various experts have stepped forward to make their reservation about crypto known. This is not unusual, and even Charlie Munger and the Berkshire CEO Warren Buffett have long opposed cryptocurrency investing, and Buffett famously called Bitcoin rat poison back in 2018. And despite the solid start to 2023, Bank of America Alkesh Shah noted that the remainder of 2023 could be a struggle for cryptocurrencies. Our strategy remains cautious on the growth of robust economic data that delays the timing of a recession, but also indicates the potential for reflation and additional rate hikes, Shah said. He added, given that January's risk asset rally was partly driven due to the short covering and mean reversion, the likely higher for longer rate environment may result in pressure for growth and therefore digital assets. According to recent updates, Bitcoin fell briefly 8% below $20,000, hitting a near 2-month low after a stock market sell-off in the US and a collapse of the crypto-focused lender. So the crypto market saw more than $70 billion wiped off of its value. The most recent sell-off has been triggered by many factors. The movement of crypto prices is quite closely correlated to US stock markets, especially the tech-focused Nasdaq. The Fed Chair Jerome Powell also indicated that interest rates may go higher and longer than expected. The rise of interest rates over the past year has weighed on risk assets such as stocks and cryptocurrencies. For now, there is little reason to buy Bitcoin as the market is saturated with negative events. The wider financial industry is also affected. Another source of worry weighing on crypto prices is the collapse of the Silvergate Capital, a major lender in the crypto industry. Silvergate recently stated that it is winding down operations and liquidating its bank. Silvergate's downfall is another example of how the collapse of FTX continues to have an impact on the industry, given that FTX was a big customer of Silvergate. Also, the Federal Deposit Insurance Corporation closed Silicon Valley Bank and took control of its deposits, making it the largest US bank failure since the global financial crisis. The bank's parent company, SVB Financial, also reported that it sold off $21 billion worth of its holdings at a $1.8 billion loss. The sale of assets came as SVB grappled with a weaker technology funding environment, as VCs are quite cautious amid a weaker macroeconomic situation and mounting interest rates. Since both Silvergate and SVB put their money into US Treasury, which have lost value as the Fed decided to raise rates, the banks have been forced to sell these bonds at a loss to shore up their capital position, according to updates. It is already a volatile crypto world. Navigating through the entire industry is nerve-wracking, even for the strongest at heart. So for now, let's watch how things unfold. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.